we've got stocks lower. We've got, actually look at the DAX. The DAX is up a lot today. Nikkei fell below this support level, which I thought was interesting. Chinese stocks are bouncing here as well. Bitcoin is actually up 2.8%, back to 90K, just about here. Not a bad bounce for Bitcoin. TLT, I do still have a long position in this. This one's definitely pulling back here a little bit. Gold, taking a look at gold here. Gold, I'm still in the trade, and we'll stay in the trade unless we... So here's my game plan on gold. If we break these highs... Oops, that was badly drawn, hold on. If we break these highs, right, what I'll look to do is take my stop loss and move it into profit. And if we do not break those highs and we just tank through the lows, I'm going to take a loss on this trade. My thought with gold is that if we hit stop on gold and continue down to this area, I would probably try again on gold longs, as long as I continue to have a confirmation from the edge finder, which right now we have a very bullish reading on gold on the edge finder. So I really like the setup here. Part of the reasons that we're getting very strong gold bullishness is, check this out. So I did more work last night on the economic heat map, and I moved this column here, changed the name of it to the surprise column, right? Because this is ultimately how the edge finder scores stuff. It looks at the actual numbers that are coming out for key economic metrics, right? You've got your services PMI here, you have your inflation statistics, you have all the stuff, right? What we're looking at for this is, oh, and by the way, ADP numbers, when they update in here, they're going to be red, which is crazy. So we're actually straight up seeing some weakness coming into the labor market there. So here's the thing. The surprise index here, this far left column, is what I care about most when it comes to economic data, right? Because why is the pound so strong recently? You want to know why the pound's so strong recently? Has anybody been watching for the currency traders out there, for my FX junkies? Why is the pound so strong? Well, there's a couple reasons. One of the reasons is that I was looking into it, but I believe, and please correct me if I'm wrong, but I believe trade balance between the US and the UK is much more balanced than the US with other places. I also think that the tariff differential between the two places is not too crazy either. So the kind of reciprocal tariff stuff doesn't kill the UK like it really hurts Canada and Mexico, right? Who massively exports to the United States, and there's a bigger spread there. So my point is, on a relative basis, the UK-US kind of relation trade stuff it makes the pound look strong relative to its peers, right? I think that's where I'm trying to get at. That's one side of it. The other side of it is, look at our economic heat map. We have a lot of blue here for the UK, right? What does that tell you? Blue signals, for those of you who are edge finder newbies, blue typically means that the surprise was a good surprise for the economy. So for example, we had stronger services PMIs than expected forecasted for the UK last time around. 51.1 came out. We were expecting just 50.8. The higher the number this is, the better the outlook for the economy, right? Well, that's a positive, so we get a blue right here, right? So what we're seeing is a pattern of blue. Now, is GDP great in the UK? No, it's at 0.4%. That's really not that impressive, but it's at 0.4% when we only expected 0.1%, so make this blue. Do you guys see where we're going with this? That is how we read the economic heat map. This is how the edge finder scores stuff on a fundamentals basis. If you are trying to better understand fundamentals, You don't want to just look at this, which is where you can see, Forex Factory, all that. You want to look at this. This is my favorite part of the economic data studies that we do on the Edge Finder. The surprise index, as simple of a calculation as it is, makes it so that you can see at a glance if economic data is hitting expectations, exceeding expectations, or missing expectations, right?
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
I was saying this earlier, as baffled as you are with the whole pound dollar showing up on the Edge Finder.
Oh, good. I was thinking when I was saying that, I was like, "Ooh, is Nick laughing at me in the background?"
No, and I also have to come on here and what else can I do than defend the Edge Finder? I saw some people saying, "Oh, the Edge Finder's delayed and lagging." And look, just so we're all clear, and James, I know you vouch for this too, because I know with your style, you're looking at all these things, but you're not looking for something to tell you when to buy, when to sell, no effort, just full port my account. And if it goes up, great, I made a bunch of money. It was the tool. Look, the Edge Finder and any analysis that you do, this is broader than just Edge Finder. Whatever your theory on the market is, right? If you think certain things are going to be bullish, certain things are going to be bearish, you said it earlier really well. Like the market can be so crazy and can do exactly opposite of what everybody thinks sometimes. And that's just the whole nature of it, right? If it was more predictable than that, then why don't all your neighbors do it, right? Why doesn't everybody do trading? If it's so easy to, call, then why doesn't everybody do it? The answer is because you can have a great educated guess on something and still it not work out. But, James, I said it earlier on the stream. I went on a rant about just being systematic this year. And for me, what that means is just like, look, the UK data, I think that this new heat map helps us out a little bit with you and I's reaction. It's like, okay, 0.4 GDP growth, that's not great. Manufacturing PMIs are still well below 50. That's not great. Services PMIs are positive, above 50. Retail sales, decently strong. But CPI is still sticky. PPI, still rising. Unemployment rate is decent, and employment change is decent. But I think the thing that we have to kind of recognize with what the Edge Finder is scouting out here is, simply put, everybody expected the UK economy to be garbage, and it came in as less garbage than garbage, if that makes sense. That's kind of the theory here that I think is interesting. But same to you, I didn't take any of the pound ideas, and now I'm just being like, this is why I need to stay systematic, is sometimes the system just points something that goes against my gut feeling, and it's like, if I can find the right trade, I should just take it. I shouldn't. But again, just to answer some of the comments earlier about like, oh, well, the Edge Finder is just a delayed system. Well, the Edge Finder, as you put it, is just a data screener. It just scans, and Ball Out, I think in the chat said this too. It's a data screener. It's not a buy the market this morning and you'll have profit by this afternoon. That would be nice, but nothing like that exists. It's simply a scanner. So am I super long-term bullish the pound? No, but my system, everything is a little bit upbeat for the UK compared to what was forecasted. Doesn't mean it's all rosy from here. I think the UK has some long-standing problems that you and I have talked about for, a while. But maybe short-term, there's a little bit of an upbeat, a little bit of a short-term uptrend off all this dollar weakness.
Yeah, so the other factor that we were discussing this morning is the central bank divergence, which we makes sense really because we've got sticky inflation in the UK. So it's now expected the Fed will be cutting roughly 75 basis points this year. I think the Bank of England is expected at 50. So we do have that slight divergence on the cuttings, which is slightly beneficial, but I don't think that warrants the move we've had.
Yeah, and I mean, again, I've been pretty shocked just to see pound pairs have not gotten, this kind of excitement on the Edge Finder in a long time. And again, I've been making the mistake over and over of not being systematic enough. Look, it showed up. and I didn't look at it close enough, and sure enough, that was the one, as some of the pound pairs took off running. So anyways, James, we've got just about 30 seconds here to go before, I mean, this is huge. We've done services PMIs together for quite a while. It typically falls on a day that you're on the stream, and I join back with you. Services PMIs this time around, I just want to give a warning to everybody. You're probably going to see some good volatility if there's any divergence from expectations here. Stocks, gold, everything is likely to move here as we go into our breaking news coming in just a second. All right, services PMI, let's see what we get. Okay, an initial slightly move higher here. Dollar index mixed.
53.5.
Okay, so slightly better than expected. We'll see if that can save the day a little bit here for kind of the dollar sell-off that we're seeing. Dipping here lower. Again, that's following this morning's week ADP numbers. So we'll see. James, what do you think about the dollar? Are you feeling neutral, mixed, bullish, bearish? How do you feel about it?
It's very, very difficult to be bullish at the moment. I generally stand bullish with the dollar because it is very, in the grand scheme of things, in the very long term, it is very stable. But right now, with the way it's moving, I cannot find it in myself to really be a bull at the moment. We've just broken level after level. The data isn't great, at least it's not what it was. The investors seem to be trying to tell Trump that they're not very happy about the tariff war. So I'm not bearish. I'm not going to sell the dollar at the moment, but I'm also not going to buy it. I'm more very cautious at the moment. So sitting on the sidelines.
Yeah, dollar index. I mean, from a price action perspective, I saw you talking about earlier. You had just kind of this washout sell-off, bit of kind of a big old head and shoulders pattern kind of looking thing here. Even retesting this really key support right around 107.5 and just tanking off a cliff here at this moment. We'll see if that if we catch a bounce here. I mean, we're kind of sitting at a longer term level of support here around about 104.5. Dollar index falling, of course, is positive here for metals. I heard you say you're in a silver trade. That's awesome. 1.3% for silver today.
Are you still in the gold trade? I saw you took a gold long. Are you still there?
I am. I'm long gold.
Ah, nice.
I'm long gold. I'm long TLT. And I know you don't love stocks, but I'm also watching a couple stocks that I'm looking to buy on the dip. So I've got, I've got stuff going. In terms of currencies, I'm still long the yen. That has been overall a really good trade, although Swiss yen specifically has held up a little bit better than some of the other currencies in terms of, avoiding falling off. Like if you take a look at like Australian yen or like CAD yen, these things have gotten killed compared to Swiss yen, which is, for me is fine. I'm not really, this is not a short-term trade for me. I think you're in the same camp. Like it's more of like a, longer term theme. I think that the Japanese heat map says a lot about this. I've been just loving these things, man. I'm using them all the time. The heat map just makes it so much easier for me to understand this stuff, and well, not understand it, but to explain it to others, and also at a glance understand it myself.
Yeah,
you have high inflation.
Yeah,
I mean, you have hot inflation. You have manufacturing PMIs, services PMIs upbeat for Japan. I just feel like, James, we've talked about this, like for a stretch there, it was like dollar bullishness was pretty easy because you just had all blue on the US economic heat map. And then when it mixed, that was a signal to kind of, roll out a little bit. You went long silver. I mean, it's a great concept there for the same reason. Right now, I feel like until that changes for the Japanese economic heat map, I still like the yen.
Yeah, I think the yen's a great play, but as you said, it's more of a long-term idea. I've had a few people talk about the yen, like, I was taken out yesterday on Swiss yen.
Okay.
And I've been trying to be very clear. I'm not looking for a day trade. It's not a swing trade. It is something I'm looking to hold for the next, 6, 12, 18 months if I need to. So for anyone that is watching this and, you're hearing us talking about yen long, just do your own research, make sure it fits you. Don't just follow blindly, because if you're taking a trade idea like this, and we're talking about the next 12 months, if you have a couple of days where you have counter moves and you've got low capital, that can be very detrimental to your equity. So yeah, just do your own research.
James, it's probably one of my favorite Forex videos. I've watched this video like probably 10 times. Do you know who Rob Booker is? Do you know that name?
I've heard the name. I'm not sure who he is though.
Rob Booker. He's someone who I've loved watching his content for years. He has retired since, but in the last few years. But he has this one video. Maybe I'll send it to you. It's how to trade like a bank, but it's like actually how to trade like a bank. You always hear people talk about that, like, oh, and the video is just them drawing sense. Like it's like that's not trading. He talks about trading like a bank because he's actually been on the floor and at the desk where there's bank traders, and what they do, is they inventory currency, indices, commodities, and they just turn over their inventory over time. So like, for example, I mean, these are also market makers. These are people, who have clients that they call up. So like, I just love that concept. But let's just say, as an example, we're talking yen for a second. Let's say that your job at the firm is essentially to accumulate yen and then sell it when you get a chance, and do that over and over and over. And what that would look like would be, okay, I'm going to sell a little yen here, or buy the yen here by shorting Swiss, buying yen, right? That's if you're buying yen, you're shorting this pair. That's the idea, right? So, okay, so I accumulate some yen longs here, and then the market keeps going. Okay, great. I can actually build up my inventory a little bit, and then build up. This is the concept of dollar cost averaging. And I also interviewed the author of Inventory Trading. His name's Sean Campbell. He's a video on my channel, and he talks about this concept too. It's this theory that, if you want to trade like a quote unquote bank, accumulating the other side of the trend followers very slowly, bits and pieces, and then offloading it to people when they get excited about the new trend that's forming. It's an interesting concept. I mean, it's very contrarian, it's very counter trend, very dollar cost averaging focus. But I just thought about it in context to our discussions about the Japanese yen. Look, I like yen for the longer term. I think that it has potential to be strong. That may change, but right now that's my perspective. So, you give me these opportunities to essentially buy yen at a discount. I can accumulate some more at these levels, average up my cost, and eventually offload it to the next guy. So, one of my favorite videos. I might have to send that to you.
So I'm going to take some bites and nibbles, and I've talked about this. I'm going to take some stabs in this area with trades that are probably 30 to 90 days out. And I'm going to try to make a decent chunk of profit here. I've already kind of calculated where I'd like my watermark high to be. If we get even near these all-time highs, I don't need them to get there, but I'd love them to, obviously. But even for this trade over the next 30 to 60 to 90 days, I'd position my portfolio where if we do get a nice little rally, then good. There's good money to be made. Have some ability to cross the watermark highs, get into some new profits for the year. And also, I just closed out some more hedges today. I updated that in my pulver alerts here. So I want to say, I'm just going to search for hedge. So MES hedge, yep, that trade is done. That was a trade that I closed out for like $270 yesterday. So I'm going to jump to that trade and add a reply to that one. So this one is trade management update, MES, hedge play, entry for $95 debit, closed for $260 credit or higher. Nice win on the hedge to help offset this recent slide. Okay, so my hedges were on MES, ES, SPY. Those are my hedges. I have probably protected close to $20,000 or better on this slide. So that feels pretty good. It's not, game changing, but a 20K hedge does move the needle a little bit, and it probably was more than that because I closed out some fresh ones today. So it all it does is allows $20,000 to kind of be banked into, if we do return and I get some of my positions to be repaired, then that's $20,000 that adds to the bottom line. And then profits, once I time this more, another hopefully, 30, 40, 50, $60,000 of profits to the upside. I'd like to try to make a move in here. If I can, I'd like to make a move to position my portfolio for another 100K. I would love for my watermark high this year was 195 or so. I'd love for this to get back up towards this level, and I'm looking at close to 300K or better. If that is the case, I'm probably pretty happy with trading for the year. I don't want to just pack it in and say I'm done. That I can do this year, but I will be cleaning up a lot of positions, going a little bit more defensive, and trying to do my best to protect some profits and limit some of that exposure. I'll probably make trading for the rest of the year pretty boring, which isn't a bad thing, but I want to make sure that there are profits to be made with this market being very uncertain. Okay. All right. Do I like buying puts? Buying puts 12 months out? Why would you buy a put 12 months out? That's an expensive hedge. And if you buy puts every year, you're going to see that you're just going to lose money. If you're in a bear market, yeah, you'll kill it. But that happens once in 4 years. So selling puts, sure, you can sell puts all year long. It's an easy strategy. Go out to a low delta, sell a cash secured put, be willing to own it. Okay, don't just expect like I'll sell puts and never take the underlying. Look, if you're going to sell a put, I always treat puts like if I had to own it, I'm willing to own it. It's simple. Like you can't just throw puts out there. I mean, you can manage them. You can say like, well, I'll sell a put and I'll close it out at like a 100-200% profit or a 1 to 200% risk. I mean, you can, but if the markets are nasty, they can blow through your stop losses too. That's undefined risk. So anytime I put a put out there, like I am willing to own the underlying, although I may not want to. Okay. Anyway. All right, let's go top down here. I do have to run at the top of the hour here, gang. So everyone watching and Chandler too, like I've got a hard stop today at 11. I had a webinar that pops up. So I've got 11 o'clock webinar that I got to run to. But let's go top down. Let's get some work done. We did all things yesterday. I'll do the same thing today. So SPX, I think we're close to all these levels that I've been watching, right? So I'm close to the 200 moving average. I think that now, and you can see the way that price has kind of slowed down today. This is actually a good thing. Price slowing down today for the first time in probably 7 or 8 trading days. I do think that the bearish pressure is a little bit less. I think that the aggressive nature of this slide is a little bit less. It could still have an ugly day or so, but based on yesterday's volatility, based on Friday's volatility, or Monday, Monday was a freaking crazy day. Based on Monday's volatility and yesterday, I think if we settle in here, we also have non-farm payroll. Hopefully the non-farm numbers don't look awful, because that might be another thing that adds the fuel to the fire to say like, okay, the bears still have control because now the U.S. job market looks a little bit dicey, right? Look, at the end of the day, if the economy is looking like it's on the verge of struggling, the Fed is going to be more active with probably cutting rates. And it's not the answer. It's probably not the best thing. What typically happens is we hit recessions when the Fed's cutting rates. Like Fed cutting rates right now in the wake of jobs slowing and growth slowing and inflation still being sticky is not a good backdrop for bull market. It's really not. So I just wonder, like, if there's more pain for like, oh boy, so it's not just tariffs and it's not just geopolitical tensions and it's not just DeepSeek and it's not just this. Now we've got the U.S. economy that's really slowing, and that's going to be sending ripples throughout the markets. So just saying, like, we'll see what non-farm payroll gives on Friday. I will be out of town on Friday, but I'll be watching. I'm curious what the markets do pricing wise. But long story short is this: we have had a pretty aggressive slide here the last like 7 or 8 trading days. Looking at yesterday's volatility and today being somewhat quiet, if we have some inside candle trading here, okay, and we have non-farm on Friday, maybe that's our final reaction to see if the market can then, find the levels that I want to see. I still want to see this 200 moving average hit. It's really simple. I still want to see the SPX hit the 200 moving average. I still want to see the SPY hit the 200 moving average. I still want to see XSP hit the 200. They're all the same. They all represent the same index. It's the same S&P, right? I want to see them all hit the 200 moving average. Okay, same thing is true on the Qs. The NASDAQ poked. Okay, the QQQ actually poked the 200 moving average, but it's still holding onto this streak where it hasn't closed below it in almost 500 bars. So I almost want to see this close below and close above, and then I can start getting long tech. Realistically, I'd rather trade the S&P and the Dow this year than the NASDAQ. I know tech typically grows back faster, but my concern is that there's such a move away from Mag 7 right now, and this whole CapEx spending with AI it's future-based, yes, but man, tech is more volatile and it is more sensitive, and it can get beat up so much worse. I think there's more resiliency in the Dow, and there's a little bit more resiliency and less volatility in the S&P. So I'm going to put the NASDAQ as one of my lower ranked indexes this year, simply because I don't want the volatility. I don't want the volatility. So I'd rather trade Dow, I'd rather trade SPY, I'd rather trade XSP, I'd rather trade SPX, I'd rather trade RSP, which is equal-weighted S&P, because let's get out of this Mag 7 garbage, right? Mag 7 they're all great stocks. They really are. AVGO, okay, fine, it's in the semiconductor hype and it's now AI hype. Tesla's been beat up like crazy, right? But we still have top 10 stocks. Berkshire Hathaway, it's not a Mag 7 stock. I mean, that is a fundamentally a strong stock with right now what has one of the biggest cash piles in the market. I mean, Berkshire might be a scary good stock simply because they're going to go on a buying spree when it's appropriate. I mean, Buffett's 94 years old. I mean, who knew that the best diet in the world was Coca-Cola and See's candy? If you want to live to 100, just eat chocolate and drink Coke every day. Guess that's the answer. Or be a, multi-billionaire. That'll keep you alive and well. So anyway, no, I don't know. ADP on Wednesdays, no, who cares? ADP it's not even close. It's never close. It doesn't matter. The market reacts to non-farm way more than ADP. It's just a noise. It's a noisemaker.
Now we're going to start with US dollar pairs. So we've got hello Tom, hi guys, and we're straight in with Euro US dollar, right? So we're going to look at the US dollar pairs in general. And to look at the US dollar pairs, we really need to start with the monthly chart, right? Because if we look at the monthly chart, there were so many key monthly levels for all the US dollar majors, pretty much all of them. And pound US dollar is a perfect example, right? You can see pound US dollar is in an uptrend on the monthly chart. And this is the last monthly low, okay? And it held, right? We had all this US dollar strength for, months, weeks, months, and then it stopped at that monthly level. And that's obviously no coincidence, guys, right? And we have had US dollar weakness ever since, okay? And pound US dollar is not the only one. We can look at, US dollar, Canadian dollar, right? Key monthly levels, right? You can see it's held there before. And you look at any US dollar majors, it's pretty much the same scenario. And, in the words of Gandalf, they're like, you shall not pass. And again, we've had bearish reaction at this level and US dollar weakness. Now, how long will this US dollar weakness last? Let's take a look at Euro US dollar, because I know a few of you guys want to look at Euro US dollar. Now, let's drop down to the weekly chart and let's get some more ideas. Now, before this, let's go back a week, right? Before we even, this week even started, like if you was to look at the charts, you would potentially see some US dollar strength could come back into the market, right? We're in a weekly downtrend, okay? We're getting lower highs, right? And then it became a bit of a range, okay? Now, at that level, we also had a super bearish weekly candle. So you could be forgiven for thinking to sell Euro US dollar. But since Monday, Tuesday of this week, we have just had ridiculous strength come into the euro and the pound specifically, right? They are stronger than Bruce Lee and Darth Vader combined, right? Crazy strong. And now if we go back to real time, just look at the reaction we're getting at this level, right? I mean, just look at that, right? That's such US dollar weakness. And even on the day chart, this was in a downtrend. So this US dollar weakness has really come from, it just gone against all technicals, okay? And it's just flying off. Now, you know, can we take advantage of this US dollar weakness? And with the example, get my teeth in, with the example of euro US dollar, you cannot buy that, right? There's simply no value whatsoever in buying this pair, right? You know, you're going to start buying up here on the day chart, right? There's no value in doing that. So that's the problem with euro US dollar, pound US dollar. We're clearly seeing this US dollar weakness. We just saw some worse than expected employment figures as well, but we can't get in on it, right? Now, there are a couple of US dollar pairs that we could get in on, and I just took a US dollar Canadian dollar sell trade this morning and took some quick profits, and we can take a look at that. But just to focus on this, guys, right? If a market is like this, right, unless you're getting in early on in the move, then this becomes pretty untradeable for me, right? If a market just does that, right, you know, how and where do you get in on this currency pair, yeah, or a chart like this? And the answer is you can't really, yeah. Now, when a chart does this, okay, it starts on the same spot and ends up at the same spot, right? But this is, I'm not going to say easy to trade. We know trading isn't easy, but this is easy to trade compared to this, right? So when price retraces, it's not an exact science, but we get in roughly in here, right? And we keep buying euro US dollar. But this is just flown off, right? It's become difficult to trade.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.